Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. Paris rapeseed. Since mid-June, the market prices have become trapped. Is trapped the right word? Yeah, I think it is trapped between the congestion band below, between 438 to 445 and 3/4, and a congestion band above between 513 and 3/4 to 519 and a half. Since we fell into this trap, we have also seen the possible construction of a head and shoulders pattern, though this is still not complete, as we are apparently an extension to the second shoulder, if that is indeed what it turns out to be. Anyway, I've highlighted the preliminary neckline in dark blue, currently at 440. I go now to the question I put forward here some 9 weeks ago, and which I have repeated ever since, and I quote, "So what else does the recent actions show? Well, we could look at it all as a possible descending scallop build here, but, and this is a big but, it will depend on what the market does should it get down as far as the May low at 386 and 3/4, and there's a lot in the way in the meantime." End of quote. Okay, so I am not certain as to whether we will see 386 and 3/4 again, but 5 weeks ago I further finessed this descending scallop pattern comment thus, and I quote, "In this pattern, what we are looking for is whether the market will halt in its ascent, so that we can then have an idea of the subsequent size of the move. Then we need to ascertain whether this move is a further move higher or a pullback lower, so that we can apply the size of the proposed descending scallop pattern move to the already constructed actual move. At the moment, it's a little too early to see if the bearish action since the run-up is it, but it will say this: halting as where the long moving average, which is currently at 495 and a quarter, crosses a significant congestion area, is a reasonable place to pay close attention to." I add this final comment: data indicates that markets break lower something like 8 out of 10 times for descending scallop patterns. End of quote. Since these comments, one new pattern has started to emerge, and that is a small late July to date ascending triangle, currently 481 and a quarter to 489 and 3/4. This is highlighted in purple on my daily chart. We are right at the end of its construction. We have even had an attempted break lower, however the combination, and then reversion back up again. However, the combination of the June 2021 low at 468 and 3/4 and a slowly rising short medium moving average, currently 468 and 3/4 also, has managed to prevent a breakdown and out of this pattern. Thus, for the moment, I'm only observing this pattern and not calling it a proper break. In part, this is due to the pattern being so small and the possibility of it morphing into another pattern. I may be missing an opportunity, but I'll let it go for one more week. Winnipeg canola. This market here seems to be on a different schedule compared to the other markets I've looked at. The drop over May down through the 2021 low at 629.5 back 13 weeks ago saw a subsequent recovery back up to the then declining and now slowly rising medium moving average, currently 742.20, where the rally tempered, spending a couple of weeks in between the short medium moving average that was then below, currently at 781.80, and the medium moving average was then above. This whole action over the middle of May to the middle of June period created a V bottom. Many weeks ago I raised the question as to whether the V bottom would have an extension or a handle, and the answer was yes, it did. We had a pretty clear handle, one that turned out to also to be a bull flag. This prompted the move up 8 weeks ago that ended 5 weeks ago, and in the process pushed up through the March 2008 high at 770, which was an earlier all-time high and a significant long moving average, currently at 778.5, and a September 2021 low at 839.20. This last one was significant as it was breached but not broken. The move up also made clear a mid-April to end June reverse head and shoulders bottom. Thankfully, the topside target for this reverse head and shoulders pattern aligned with the ones for the bull flag. Anyway, all this action allowed me 4 weeks ago to draw a late May to late June bullish shift pitchfork, highlighted in bright red on my daily chart. This had merit, but by early August prices had broken down and out of it. So why have I still kept this pitchfork not only on my daily chart, but highlighted in red on my daily chart? Well, it was because something I thought might happen started to actually happen. You see, the market broke out and below the bullish shift pitchfork, only to run smack into long moving average and the earlier all-time high at 770 even, and reject the move lower. This rejection led to the prices running up along the outside and underside, just below the lower time, currently at 899.60 of the bullish shift pitchfork, until this week. It is only this week that we have seen prices start to move, at the very least, sideways and away from the original sentence at the start of this commentary. Well, that comes in now. You see, this market seems to be on a different schedule here compared to the other markets I've looked at. In other words, we are past the bullish pitchfork stage here, whilst here we also just now seem to be breaking here. I will reserve my opinions on what may be next for at least another week here, as I am not certain yet as this move lower is a move lower or not. Just keep a close eye on the short, medium and long moving averages, as I suspect they will become increasingly important. Bursa Malaysia crude palm oil. The mid-August to early November 2022, that's right, August to November 2022, mildly bearish shift pitchfork, the one that's highlighted in green on my daily chart, is still running the show here after so many months. This mildly bearish pitchfork has guided prices more or less lower. Initially in between the upper time, currently at 41.23, and the middle time, currently at 34.90. Then for a while in May and June between the middle time and the lower time. Lower times are currently at 28.58, before moving back up again in between the middle and upper times. The more recent developments had seen prices push up and stabilize over the slowly declining medium moving average, currently at 37.60, and more recently a now slowly declining long moving average, currently 38.75. This stabilization had been very interesting, as the market seemingly formed a possible diamond pattern type from July to date in between the times. This diamond pattern type is not set as yet, and I may finesse it further, but it does have some merit. However, I suspect we are coming to the end of this diamond pattern type in the next week or so. So we will either have a break out from this pattern or a morphing into another pattern. All this happening whilst we are still within the original August to November 2022 mildly bearish shift pitchfork. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.